Hey, what's going on, FinTwit? How's it going today? Great day. Dow's not crashing. The markets aren't really crashing today. We're hanging in there on a Thursday for the first time in a month, maybe. It's good times. Yeah, welcome to another episode of the Rotation Report. By the way, what up, New York? Go Pistons. Let's
Nice.
go. Let's
Nice.
go. Gonna be a great series. Yeah, and if you haven't noticed, I've got a special guest today, StockTwits Community Member of the Year, Don Corleone, 77. What's going on, Don?
Nice, nice. I like the way you said that.
Try.
And remember it, Don
Don
Corleone.
Corleone.
There
Okay.
you go. Nice, nice. Yeah, dude, I'm on cloud nine. Believe it or not, for the first time, somebody actually publicly and in writing said that I was a friend of theirs. So I'm never had that happen before. Someone admitted in public. So
It's
thank
great.
you, Horizon. Appreciate that. And
Shout out
just
Horizon.
couldn't be happier right now.
That's great. Yeah, very excited to have you on. I think everyone's gonna love this guy once they get to know him. Oh, he's friendly, but he's a killer. This guy. He's got some good jokes. And for everyone listening in the chat, drop some comments in the chat. Anything you want to talk about, we'll get to it eventually. But for now, we're just gonna start with the story. And the screen share is not working. Not great. Not great, Keith. Oh, there we go. We got it. Yeah, we're starting with gold today. Everyone's talking gold, right? Well, actually, no, we're talking tailwind week, right? Okay. Lots of positive seasonal tailwinds this week. You had the tax day relief, right? Everyone's relieved to be all settled up, and you've got Easter this weekend. Can you feel the tailwinds? We only dropped 700 points in the Dow yesterday, and market's kind of hanging in there. But yeah, let's get right into the gold because I think that's the story of the moment. Yeah, big rip yesterday into, I'd call it a big Fibonacci extension confluence, just a mass from these massive bases. This chart goes back to 2011, the peak, and then you see there's just a giant base for a decade plus, and then there was another base that formed from 2020 to 2024, and sometimes these numbers line up, the ranges of the base line up, and you get a nice little target confluence, and boy, do we have one here in gold. So Dawn, what do you think? Is this a blow off in gold right here?
Well, I think I had mentioned to you previously, I actually went into the gold trade back in 2020. And when it was reaching back to that, you see that cup pattern back that decade. And it made the run. I actually thought, as there was a lot of movement to the risk aversion, that it would run a little further back then, actually. But it did come back to that, decade high. And my own opinion, I don't know, I'm not saying this is right, but I think there was some competing money for safe haven assets. People were moving a lot into cryptos and things like that, and I think that may have held it a little bit. And but certainly now with all the uncertainties in the market, people are definitely looking toward moving to safer assets, and gold always been fit that bill. And I also think, and I've never really heard it spoken about, so I don't know if there's any, if I'm way off on this, but I think people becoming more cognizant of it, more aware of it through things like, when Costco was selling gold, right? People could go in and buy gold. I think it put it front and center in people's mind, It maybe got people talking about it, and I don't know. Again, a lot of market movement is sentiment, and if people thought that maybe that was a way to go, maybe that helped it break out of that base that you're showing, and it's taken it to another level. But there's certainly a lot of factors behind it. I just think that might have been one contributing one. But yeah, I with all the uncertainty out there right now, people do look for. Traditionally this has been the place to go.
The question is where else are you going to hide? Because you were just talking about Costco. I was just looking, Costco, 50 times earnings. You're going to hide out in Staples, Walmart at 37 times earnings. There's not even who knows if there's going to be 37 more years in America, you know? And at this point, I look at the confluence and I'm like, okay, we've got British guys going around like, they got this quote, gold is money, everything else is credit. So the guys with the British accents are all saying this.
Yeah.
And it's like, okay, right. And then you look at the move and it's like just a straight line into the target. It's like,
Yeah.
I think you gotta take some off, but doesn't mean it'll stop.
Right.
I flipped. I had some gold bonds, gold miner. I flipped the other side. I shorted gold miners actually because Barrick Gold. There's something going on in Barrick Gold where they're having problems with the governments in Africa or whatever, and all these world leaders see Donald Trump being protectionist and throwing his weight around, and it's just like breeding more protectionism, breeding more problems for these companies. It just seems like a simple way to go here.
The geopolitical landscape is, the uncertainty at this point, and the way it's shifted and changed. I think people don't know what to expect. They really don't. And we are, we're moving into kind of territory that's new to people. So, yeah, I think safe havens has been the trade, and it's worked pretty well.
You said it. And when you look at gold versus the S&P 500, you can see there's a little bit more meat left on this bone before you get to a real, decade-long kind of resistance zone. But we're right in the ballpark. But yeah, over the last 2 months, you definitely wanted to be in the safe haven from mid-February and beyond here. And then, like you were saying, the global flight to safety, right? People don't know what to do. They're just getting out, figuring out where can we park our money. The Swiss franc, look at that clean little breakout in the Swiss franc to dollar. I mean, I don't know if I've ever seen it look so clean, so good.
Yeah, it's one, and I guess that's where you have professional investors that are moving big amounts of money, and then there are people like us, right, retail investors, right? And I know for me, this might be hard to believe, but I'm actually older than you, Aaron.
Oh, okay.
You probably can't tell from looking at me, but because I have the hat on, of course.
Right.
But people my age, it's really an interesting dynamic because when you're young and you say you have a professional career and you're putting money away periodically and in perpetuity, you're not worried about major pullbacks because you're gonna you'll live through them, right? And you'll be able to typically you recover, right? It could be a couple years, it could be longer. Interestingly, we were talking about this. People in their 30s have really never experienced a prolonged downturn, right? So it's really the buy the dip mentality has really worked for the last 15 years, really.
My entire career.
Right, your entire career, exactly. But old people like me, we've been through
Your entire career too. Don't give me that shit. Rates topped in the 80s, right?
Yeah.
In 80, 82 was it? Come on now.
But we,
You and Howard acting like you didn't just ride a bigger wave.
But I've been through I went through the recession in the early 90s. The recession, the dot-com bubble burst was I was working for a dot-com company when that happened. And, you're an at-will employee and we walked in on a Friday and they said, we're closing doors on Monday and good luck. And no severance, no nothing, right? So, I've been through that, and then the great financial crisis. That was significant, and it was scary. And but if you've never been through it, you assume risk. I mean, retail traders have a tendency to assume risk, and if you're young, that's fine, right? You can live through these cycles. Everything, if you study history, things are cyclical. Things go through cycles. And, a prolonged downturn, it's historically that can happen. So older people like me, we have to move our assets more into safer havens, right?
Into the Swiss
because
francs, yes.
I can't afford to sit through, if there's a 5-10 year downturn and you're getting ready to retire, that's a difficult, that's a difficult situation. And what happened recently, I do know people who had to like postpone their retirements a little bit because their 401ks took a big hit, and it's a scary thing for people as you get older, right?
Yeah, I can imagine. But speaking of flights to safety, we've got Bitcoin versus gold here. That thing, Bitcoin's been lagging gold, but I mean, anyone who's paying attention lately can argue like, wow, Bitcoin for the first time is showing gold-like characteristics while all sorts of risk gets destroyed. And you notice over the past couple of months, we've seen a little bit of a bullish divergence in the RSI lately. And I was thinking, that's great. Love the RSI divergences, but we've seen plenty of setups like these just post in the last couple months, ever since Trump put that tweet up where he's like, I can't break any laws, I'm saving the country. Ever since then, the technical rules have been kind of thrown out, baby with the bathwater, all that. And so I wonder, is this a giant double top back from 2021 in the Bitcoin versus gold, or is this just a bottom that's gonna rip here? And I'm not sure. Any thoughts?
I'll be honest with you. I stick to what I know well, or I think I know well. Hopefully I know well. Cryptos, it's just not a space for me that I can speak as intelligently to. So I tend not to speak about things I don't know a whole lot about. It's just not my forte. But I do know people in the space, and I talk to them. But for me, I trying to know everything about everything is very, that's a task that I'm just not capable of. So I tend to focus on areas where I have what I believe to be a little bit of an edge, and that's typically, within equities. So I don't dabble as much into cryptos as a lot of people do. So,
okay. Well, I'm going to ask about tariffs next, so I guess you just don't do the macro tour, huh? Okay.
Well, we could certainly talk about the macro economy. That's something I focus on a lot.
Okay.
I think, as I've progressed in my understanding of the markets, when I first started in trading, a lot of times I would focus on individual stocks, and I think I've really moved to a little different mental framework, where I realize the importance of getting the macro landscape right. It's really difficult to be long and make money in stocks when the market's going down, right? 80, 90% of stocks typically go in the direction of the overall market. So if you're wrong about the market, you're just making, the probabilities are moving against you, right?
Sure.
So what I look to do from a strategic standpoint is I'm always looking to put the odds as much in my favor as I possibly can.
Wow,
right?
You sound like a technician.
Well, it's funny because I've heard a lot of analogies, analogies to people who are, for example, professional poker players, right?
Yeah.
And professional poker players, they know they don't win every hand, right? They're going to lose hands, right? And I read once, and that's kind of what triggered it for me. I read one time that poker players can often make good traders because they know when they get into a bad hand, they discard it quickly, right? They don't hold on to it. They don't try to play it out, wait for a river card. They know the odds are against them, and they're not going to stay in a situation where the odds are against them, right? So they'll fold quickly if they're dealt a 2-7, unless they've picked up some tell of the other players. They're not going to play a 2-7 into the river, right? So for me, it's all about probabilities, and so what And I tend not to use terms. I've read a lot about Jesse Livermore, and I tend to take his stance. I don't use terms like bullish or bearish, because to me that kind of tends to lock you into a long-term commitment to something, right?
Yeah, absolutely.
So
Especially the more you talk about it, you're just setting yourself up for failure. If you're going to go on to StockTwits or wherever and just post your opinions about a stock over and over and over, guess what? You're just ingraining that in your mind. It's becoming part of your identity. These are terrible things. You just want to avoid that.
yeah,
Right? You want to have a nice detached,
you don't want to fall in love with any individual company
No.
as much as you'd like to. And what Livermore used, he used a term that I found interesting. He used the term line of least resistance, right? And so that doesn't mean that that line of least resistance will stay the same for extended periods of time, but at a particular moment in time, there might be a line of least resistance that's higher or a line of least resistance that's lower. And interestingly, when he would ever be asked for a stock recommendation, he would never give individual stock recommendations. He would talk about the overall market and the line of least resistance within the overall market.
Sure.
And obviously, I'm sure you get it. I get it a lot. People want to know what stocks I buy and which ones I'm in. And I tend to stay away from that because, I don't know what someone else's trading strategy is.
Right.
And I don't know their risk tolerance. I don't know those things, right?
It's not even, it's not just your tolerance, but it's just your personality. Like what can you repeat over and over and over and over again? And that's why I use the technical analysis for. It's like you might see my charts that I post on StockTwits or whatever, and we've got lines, we've got levels, and it's just a way to have a system of thinking about risk and limiting risk. That's all it is. It's just information, right? It's not perfect.
And
no one's going to have anything perfect, but you're just trying to be a systems thinker. And like you said, putting the probabilities in your favor. If I'm right, let's be very right. And when I'm wrong, let's be just a little wrong, right?
Yeah, and I think the fact, you mentioned two things there that I think are critical personally. One is, you use the term system. And I think, I interact mostly with retail traders. I think that's a really important thing to understand. Creating some form of system where you feel you have an edge and implementing that system and sticking to it, right? I mentioned trading strategy. I have it in my personal profile, my personal trading strategy, right? And some people who have read the book Trading in the Zone by Mark Douglas will recognize that strategy,
check it out.
right? And so that's the strategy I use, but it may not be the same strategy everyone else uses. So, I can move into a stock and I can, if I see it move against me, I might have a tight stop. I might be out of that stock where someone else might hold it longer, right? And there might be instances where on the same exact stock, if someone bought it the same moment I did, I could make money on it and they could lose money or vice versa, right? Depending on how they manage their trades, And I think that's kind of what I had to learn, going in. I think there's a tendency for a lot of retail traders, they buy something and they stay really committed to it, right? And you want to be right. You think, if you did a lot of analysis and a lot of work, you want to be right. And it's difficult to admit when you might be wrong. And that's like a big thing that I think is a really critical thing for investors is, and it's something I'm trying to do in my personal life and it plays into my trading is getting rid of my ego, right? If I think I always have to be right and whatever I do has to play out, I'm setting myself up for failure. I'm putting the odds against me, right?
Pretty much.
And so if I go into a trade, there are multiple variables I look at. Trades might look like a good trade, but if it moves in a different direction, I have to be willing to say quickly, I was wrong.
Absolutely.
And that's okay, right?
Yeah.
It's okay to be wrong.
I want to move on really quick because
go ahead.
Back to the Bitcoin for a second. This fiat, you were telling me it means force. Is that force in Latin?
Literally means force, right? So it's funny when you go on to Coinbase or whatever, and they tell you, when you make a deposit, it'll tell you the type of deposit you can make, and then they use the term fiat, and a lot of people don't know what it means, right? But it comes from the fact that when Nixon, for young people that probably don't even know who Nixon was, but Nixon took us off the gold standard, right? So these paper currencies used to be tied to something tangible, right? So there was a gold standard, it was tied to gold. The pound sterling in England was representative of a pound of sterling silver, right? But when we detached from those tangible assets, the fiat is the term we use because it literally means force. So what you're doing when you invest in that particular currency, you're basically trusting the force of the lender that they'll be able to repay you. Right? There's nothing else. There's nothing else backing it.
Wild. Yeah. That is wild.
There's nothing else backing it.
Clip
right?
That's a clip.
And so the banks, the leverage banks use when money's deposited, and I mean it's really interesting. That's a whole nother discussion, but to get into the monetary system and how it works and how leveraged it is a whole nother world, right? And then you can get into derivatives and so forth, but it's very, very complex. And
I think this all ties together because I think we can all imagine how there's just hidden pockets of leverage with hidden pockets of leverage with hidden pockets of leverage, and I'm sure that's getting out there. And there was Bank of New York had earnings last Friday, and they said something really interesting. The trade war has negative carry. Basically, every day this goes on where there's all these trade question marks, it just gets worse every day, right? The negative effects just keep spreading and spreading throughout through the markets, through the system. It's just a really interesting way to think about it, especially when you're like, hidden pockets of leverage, not great.
Yeah, I think if I'm not mistaken, the notional value of derivatives now is even higher than it was before, the 2010 recession, right? So there's a lot of leverage, certainly a lot of leverage in the market, right?
Never mind. You've changed my mind. You know what? I think I'm going back long gold.
Well, I think it's, again, when I was younger, I was willing to take more risk. As I've gotten older, I have tended to be more conservative, and so I'm not interested in if I want to. I don't gamble when it comes to investing. If I want to gamble, I go to a casino and I bring money that I don't expect to bring back. It's entertainment money, and I'm okay with losing it.
For sure.
And because I know the odds are against me. When I walk into the casino, the best odds, the absolute best odds I can get is around 48%, right?
Yeah.
So the odds are against me. So I don't expect to go there to win unless I have, counting cards is an edge for people if you're not caught, right?
Who needs a casino when you have modern financial markets? Come on, come on now.
But again, same thing, right? I want to, in general, the odds are against me, but if I can find an edge, if I can find variables and patterns that I can look to and put the odds in my favor, again, I'm not going to win every time, but if I, like you mentioned earlier, if I mitigate my losses and keep them small and let my winners run, over time, I can put the odds back into my favor, but I have to do it systemically. And I think, that's one of the things that I've noticed, because I have friends that are portfolio managers. Professionals have a system that they follow, and they minimize risk, they put the odds in their favor, and over time, they tend to win, right? And so that's what I hope all of us as retail investors, we can kind of take that attitude and recognize we won't always be right, but we're constantly looking whatever we can do to put the odds in our favor and find that edge and use your system over time. You should be able to hopefully come out ahead, right?
Absolutely. And so back to, we're looking for some sort of safety trade that isn't, the Swiss franc. And it's, I noticed yesterday, everything green was basically just commodities yesterday. Commodity this, commodity that. And I've talked about this gold versus oil chart. That, of course, that was before Liberation Day. Boy, that was great. And over the this chart goes back to 2012, and basically you could see from 2015 to 2019 there's a little bit of a consolidation pattern, right? But then you had the big COVID breakdown, and you put a time cycle on these things that kind of line up for for various peaks. And I was looking at it. It's like, wow, you could make a case. This is a potential heck of a bottom. And it's like, how does that happen from here? Like, is it possible that this oil can hold this kind of pivot versus gold and just kind of start to outperform? I'm just hypothesizing, like, what does that world even look like? Because is it like everything's overly financialized? That could be a thing. Or is it like the Iran news, right? The war, some sort of war thing going on. I mean, it's just an interesting thought, because people are pretty bearish to the economy, and maybe that's just what it is, right?
Yeah, I think again we're moving into kind of uncharted waters. I think geopolitically, right, which plays into a lot of this, right? Nobody knows how these tariff war is going to play out, right? I mean, we can hypothesize certainly, and it's very clear if you go on social media, people have different opinions of how it's going to play out, right? But nobody knows, right? And the more uncertainty that the market's a forward-looking mechanism, and it likes certainty, it likes consistency and patterns that it can see. And when we move into areas where it becomes more uncertain, the markets, that's what the markets just do not like. And nobody knows how it's going to play out. And as a trader, I think one of the words that we've been talking about is being nimble. And I think this is the type of market where you have to be really, really nimble, right? You could, we look at setups, we look at things that we again talk about putting an edge in your favor, and you go into a trade and you got a president now that at any moment has a device in his hand that can make a tweet that can change everything, right?
You're right. And company CEOs are talking about it. They're like, yeah, oh, you want guidance on anything? Well, it can all change with a tweet, so good luck.
100%, right?
And that's just the business world in a nutshell right now. And there's actually one more thing that's come through this earnings season that really kind of put a different perspective on it for me, and it's just the tariffs and the protectionism. It's slowing down. When you place orders for stuff from overseas, now there's just more layers of bureaucracy. Like it could take 6 months for your deal to clear, you to get your supplies, whatever, and that's before anyone intentionally tries to like rough you up or give you a problem, right? So it's just slowing the economy to a halt, basically. So
yeah, and one of the things I do, I mentioned the excitement of having a friend, and I kind of joke about it, but I'm like on the computer all day. That's what all I do is I watch news streams. And I have access, fortunately, through some friends of mine, that I have access to professional sell side data. So analyst reports. Mm-hmm. So I'm constantly monitoring news, constantly monitoring analyst reports. And by the way, I just want to make a quick note here. When it comes to analyst reports, I've been posting a lot of them on StockTwits and on X. I post there as well. But analyst reports, I made a post that I pinned on both of those of my profiles on both of the sites, because like everything else, analyst reports are just a data point, right? They're not gospel. They're opinions of the analysts who are paid. They're professionals that are paid to study these companies, right?
Oh, I'm sorry.
I'm sorry?
Paid to mislead you and then get bullish at the top and bearish at the bottom.
There's also potentially political motivations behind some of the reports. And that's a nuance that you learn as you get, the more you experience, the more you can see. But it's a data point. It is a data point. And these reports are distributed to very wealthy people who manage lots of money. So they have an impact on the market, some impact. sometimes short term, sometimes longer term. But I read them all day long, and what I've noticed, and I've noticed it in the news as well, is all the analysts are becoming more conservative. They're taking price targets down, like across sectors, right? All they look at it in broader general terms. So they might say, hey, we're going to cut price targets within this sector, and then every company in that sector is going to have their price target come down.
And that's where the long run opportunity comes in, because you're getting that it doesn't matter. You're a stock. It doesn't matter. You're in a sector. It doesn't matter. And, in bear markets, when you're trending lower, like you're under the 200-day moving average, you're vulnerable to all of that.
And that's where I think your work is really important, the type of work you do with the rotation report, right? Where are you rotating into that, again, puts that edge into your favor, right?
Yeah.
If I'm climbing a ladder to get over a wall, if I have the ladder in the wrong place, I can climb all I want. I'm not going to get over the wall, right? You got to make sure your ladder's set in the right place, right? And if you're in a sector that's just being sold off, like with the Doge thing, right? That organization, government services sectors just got hammered.
Yeah.
And good company, it didn't matter if the company's fundamentals were solid, technicals, you throw that out the window, right? Everything just got demolished. And if you're in that sector and that's where you're buying, you're going to have a hard time making money, right? If you're short, that's different, right? You'd probably benefit it. But you got to be, it's just more that I've learned, being right about the, kind of top down, being right about the overall market, being right about the sector, and then being right about the stocks. Like that's kind of how I see it. And I don't start with the stock, if it's not in a sector that's, if the trend is against me in the sector, if the trend is against me in the market, man, I just went into something that the odds are way against me. Why would I do that?
Wise words.
Right?
Wise words.
Yeah.
No doubt. And let's see. I think we got a lot of the key topics. There's one thing I wanted to really ask you. Any trends in these? You read a lot of the earnings reports and a lot of the headlines. Are there any trends you're noticing? You mentioned just estimates everywhere getting lowered across the board. Any other anything else standing out in the headlines?
I think that's the real thing. I think the way the market terms it is, the risk of recession, right? And I think what I'm seeing across a lot of the analyst reports is, factoring in a slightly higher possibility of recession, right? And that's where I think, the smaller growth stocks, for example, that's really challenging, right? Because a lot of their valuation is based on future earnings, right?
Sure.
And so if the assumption is the market's going to go into, more turmoil, then people aren't going to be willing to take on the risk of smaller growth stocks, right? So from a sector, from an overall standpoint,
like we're already at that point. I feel like
we are, but that's where the estimates are starting now to come down. So the question is going to be, to your point, right? That's being factored in, right? But the market is a forward-looking mechanism, right? So when we're factoring it in, stocks have come down. How could they go lower? How bad can it get? Or when does it reach a point where it bottoms, and then, the tell will be that the analysts tend to be slightly behind the move, right? Because their job is to kind of say what's happening, right? Not what's going to happen, right? So when they start, when the market starts going up, and that's where people kind of, they say the reports are useless, but they're really not. That's when the analysts start upgrading, right? After the stocks have already gone up a little bit, right? So you're trying to think ahead, right? Where are things going to go? And I think right now that just nobody, the situation between the U.S. and China is clearly, like, I think one of the biggest drivers in the market right now. And the dynamics, like if you get granular in that, there's a lot of interesting stuff going on, right?
Well, that's a great point, and it leads me into like what I've been see, like you have the gold spike into that target area. We've got this peak policy uncertainty. Like who the hell knows what's going on with the trade war? Everyone's like, I don't know. I can't tell you anything. I need to know some more facts. But the interesting thing was, in the middle of the night, Tuesday night, the pre-Wednesday session, China actually announced they appointed a trade negotiator, which was better than absolutely nothing before that point. They were just like, hey, Trump, go fuck yourself, basically. And but we actually saw like a sign that there actually might talk. And I feel like that's where gold versus oil gets interesting. That's where, okay, maybe, the fear is overdone a little bit, but, we'll see.
Yeah, I think, and I'll just make one comment here, and I don't mean to rustle any feathers or whatever, but, my wife is Chinese. So, I've been to China a number of times, and I think, this is just my own opinion, okay? The people I talk to in the United States who have never been there, in fact, many people have never been out of the United States, they don't really know what's going on there. No. And their perception of that country and where they are, and it was kind of it was kind of epitomized by a comment that I was really shocked he made it, Vance, right? The vice president, when he called, the Chinese peasants, right? That was in the news recently. I don't know if you saw that, but he said he referenced the Chinese as peasants a couple times, and that was really not only was it a misnomer, it was like very, very Chinese didn't like it very much, and understandably so. And so they're not. I think the assumption was China was going to come after these tariffs were implemented. China was going to come with their tail between their legs and beg for some kind of deal, right?
I think it was just that's what he does. I don't know if they thought any of that.
Well, I think he expected people to countries to come to him and
Sure.
look for deals, which he's talking about now. But I don't think China. I think he underestimated where it is and the Chinese people a little bit. That's all I'm saying.
I think that's a fair point. I think a lot of people just have, just because of whatever pictures we have in our head of China, not just because, of our culture and our media or whatever you want to say, like Eastern philosophy is badass. Like, I tried to get people to talk about it. It's like, you know what the Chinese are doing? They actually have a pretty good view of the world. Actually, it's a lot more wholesome. And then you try to talk to them about how they have like really long-term strategies, and like no one gave a shit until Tepper started talking about it. And then in January, February, when post DeepSeek, when the Chinese tech stocks would just moon every day, that's when people were kind of interested.
I think the thing Westerners underestimate and don't understand is how technologically advanced China is. And I think that's a big factor that people don't understand. When I went there, the first time I went to China, I kind of had some assumptions. I kind of expected it to be, kind of rural, whatever. And I went to my wife's hometown, and there were just skyscrapers everywhere. It was completely different than what I had anticipated. And when you look at some of the technological advancements that are going on there, I went to Beijing, and and not only is it progressing, but there's like people care about the country. Like I grew up in New York, in the suburb of New York, and I used to go into New York, and New York can be a tense place, right? And there are places in there that are not necessarily well kept. In China, man, everywhere you went, they had people, government people cleaning the streets. The hotel I stayed at, I went to work out. It was early in the morning, and I was the only person in there, the only male. There was a woman working out, and I was the only male. I went into the locker room to wash up. I came out. The moment I came out, somebody went in and cleaned, and I'm like, holy cow! These people, like, they really take care of what they have, And it's very different, I think, than the image Western media projects about China. And that's I'll leave it at that.
Sounds
I'm not trying to
fantastic.
make
I
a
would love
political
to.
statement or anything. I just think
Yeah.
China's not gonna,
Yeah, you're good.
you know, it didn't play out, and we've seen the tariffs escalate a little, right?
Sure.
And I don't know if everybody expected that to happen, but to me, I don't find it at all surprising. So
No.
how does it play out? I don't know. Nobody
Well,
knows.
nobody knows. Yeah,
Right.
exactly. But no, it does sound like a country that we would like to invest in if we were not threatening banning their delisting their stocks. That would have been nice.
And I recommend, if anybody gets a chance to go over there, I highly recommend it.
While you still can.
Yeah, yes.
All right, we had comment due diligence in the chat talking about Disney having a nice day. Yeah, look at that, plus 3%. I was gonna pop this long-term chart up. Look at that. We've got a nice little bounce off long-term support there from COVID lows. Man, look at that thing. Beaten down, sold off. They have China parks, I think, right? Is that part of the sell-off probably? Yeah. Not a bad area.
Yeah. I I was telling you earlier today, I just pulled up my portfolio, and yeah, one of the stocks I had looked like it benefited from the Google antitrust announcement. So that's another piece of news that came out earlier today.
Oh,
Yeah. So yeah, MGNI, it's up, looks like almost over 14%.
nice. Nice day.
But you see what happened, right? It didn't matter, like that stock was in a sector. You know, if you were in it back in February, good luck, right?
Pretty much.
But back there are opportunities, right? But I mean, the chart's just horrendous, right? But every once in a while, sometimes it's better to be lucky than smart, right?
Yeah.
Nobody knew what the ruling was going to be with Google or whatever. But there's a lot of positives, I think. Again, you can look at individual companies, you could look at their fundamentals, you could look at, I was first thing I studied when I started investing was William O'Neill's canceling method. I read his books, how he looked at charts, all of that. And you can do it all, right, with a company, but if it's in the wrong sector at the wrong time, yeah, like I said, good luck, right?
Pretty much.
But
Is
yeah,
Magnite cousins with Trade Desk?
yes. So it'll be interesting to see. Look at Trade Desk. Yeah,
What a nightmare.
yeah, it's been brutal, right? And so if you're a contrarian, what we were talking about earlier, all of the analysts have been lowering all their estimates on these stocks, right? To your point, is that already priced in? And from here, is there an opportunity to move higher? You're going to look for confirmation first, though. I never try to pick a bottom. That's just, I know people some people are good at it or think they're good at it. If you are, you're much smarter than I am. To me, picking a bottom is just something I don't do. I don't try to do.
Yeah.
I rather wait.
That's a way to optimize life there.
Right? And I wait for the trend. I don't want to go against the trend, right? So why try to pick a bottom? I wait until the stock's starting to recover and I see the trend going in my favor. That's when I get interested, right?
Yep.
I'm not trying to pick it on the way down, right? We were talking about that Paul Tudor Jones sign that he had behind his desk. It's a famous photo. And, the idea of averaging down, right? Retail traders tend to average down when a stock goes down.
Average loser.
Right?
Yeah.
Yeah, losers average losers, right? And I don't, it's not me saying that, right? Don't listen to me. If it's a chance to listen to Paul Tudor Jones or me, listen to Paul Tudor Jones, right?
You said it.
That guy, unless there's some edge you have, some information or something that gives you an absolute edge, I never average down. It saved me so much money as an investor. I never, unless there's something I know that no one else knows, which is doesn't happen.
Right. You
I
don't
don't
know.
average
Yeah,
down.
you're not in Congress. You don't know.
No, I don't know. I'm not
You're
friends with
not in
Pelosi.
the signal
Right,
chats from the White House. So yeah,
right, exactly right.
we got H Sons. He boy, I probably biffed that, but Fubo TV. So Dawn, what was up with this headline from early January? Can you recite that?
Well,
Well,
they actually had news come out today.
okay.
This morning, I posted about an exclusive deal they did with one of the soccer leagues, I believe. And actually got, it's interesting, I kind of got hammered for posting that on StockTwits because they're like, it doesn't matter that. So, what I do, just to be clear for people watching, I post a lot on StockTwits, but I post news, how you discern that news, how you interpret it, that could be, that's the purpose of the forum, is to share your ideas, right?
Sure.
But they're like, don't even bother sharing news. I'm like, no, the news is the news. What it means is what is up to us to interpret. So that news came out this morning. So there was some news today, but I'm trying to remember what that pop was. Back in January, I'd have to go back and look at the news that popped it. This isn't a stock I follow intimately, but sometimes there'll be news about some partnership or some potential
Disney deal.
Yeah, it was a Disney deal. That's what it was. Yeah. So that you'll have a pop, and that's not atypical to see a pop like that, and then this pullback. You're a chartist, so that's not atypical, right?
Oh boy. Look at that.
But yeah, I don't follow every stock that I post about. So I try not to give opinions about things, again, that I don't know a lot about. But Fubo, I remember during COVID how that stock was just booming,
It had
right?
a moment. It had a moment.
And that's what and that's what you got to understand as an investor, right? During COVID, where there was the risk on mentality, everybody was like, okay, let me just find something that has a future opportunity and I can go into that and it's going to go higher. And that's where, Kathy Wood got the returns that she did, right?
Sure.
Made her renowned, made her famous, right? But that was the right environment for that type of investing, right? Right now, if you're basing your financials on future growth, it's not the environment right now. I mean, what is the stock trading at? A few dollars, right?
2, 3. Yeah.
Yeah. What was the high? 62. Am I seeing that right? Right.
Could be
I mean,
split. Who knows? Yeah.
it shows you, right, when risk is on, and people, the animal spirits are out. People are willing to take risk when the market's uncertain, and when there are challenges, risk comes off. And you gotta be aware
Sure.
of that as an investor.
For sure. And I wanted to wrap us up on, and again, congratulations on becoming StockTwits Member of the Year. But
Thank
I
you.
think a lot of people out there are like, hey, screw this guy. Why am I not StockTwits Member of the Year? And I thought maybe you'd have some wise words for the people, because I think I know why.
Well, yeah, to be very candid, by the way, I didn't even know there was an award like this, and I think this is the first year they're doing it. So 5 years ago, this was just part of a life decision for me, a broader life decision that, I looked at, what would make me happy. And I spent a lot of time personally, introspectively, and I came to a conclusion that the highest and most noble form of life I could live is to try to make myself a gift to other people. So I looked for ways I could do that, and I've had experience in online communities before. I actually built an online community back in 2005 when this was early on. So I know how it works. I know how the interaction often plays between people that are on a free site, right? But I wanted to make myself a gift. So that's what I did. I went in and shared as much information as I could with people, helped people in any way that I could, if I'm capable of it. I let people know I don't have all the answers, right? And people I tell them, don't buy a stock because I do. It doesn't mean it's going to go up. In fact, as we talked about, oftentimes I could be wrong, and I have to cut my losses. But that's really what I think played out was this motivation, and it's in my profile statement, the first sentence. Make your life a gift to others. In my opinion, there's more to life than money, and the relationships I built over the last 5 years on StockTwits, and it's gone broader now. I wouldn't trade that for any amount of money, to be honest with you, right? And don't get me wrong, we all want to make money. That's why we do this, right? But I think we need to keep it also in perspective. And all the great philosophical and religious teachers of the world have cautioned us about becoming addicted to money and becoming addicted to wealth. And I just don't make that my number one priority, right? My number one priority is how do I make myself a gift, and how can I build relationships? If you offered me money or relationships with great quality people like you, I'll take the relationship every time. The money will come. Money can always come, right? But how do I build a relationship? I'll take that over anything.
Yeah.
Right?
And,
So
just like people think you do it by, oh, look at how smart I am, or oh, look at my trades, or oh,
I'm not the smartest guy in the room by a long shot.
No, but you do it by just like, being like a good person, being helpful goes a long way. Just be helpful. Basically, make your feed not just like you rambling on about this and that. Just actually make it like extremely helpful, and like people will freaking love you for it. And I think they also appreciate your honesty, your humbleness, right? Because God, there is just none of that on the internet these days.
Well, it's funny. This actually came up last night. I started watching this streaming show, Newsroom. I had heard about it. It had pretty good ratings. And there was a scene in there, and I guess this was from, I think it first year was like 2018. But there's a scene in there where the guy, it's about a news organization, and he references a study, and he says, we've never had, in the United States, there's never been this much tension and animosity between people since the Civil War, since the Civil War.
Probably.
And it's interesting, I just want to take one quick second and say this. I posted on StockTwits a while back, there's something Democrats have used a lot where they reference the presidential approval ratings after like a month in office. And if you look at it over time, they point to the fact that Trump has among the lowest. This isn't a political statement at all. I looked at it, it was a chart going back to like the 1960s. That's not what interested me. What the chart also showed was the approval ratings among their party and the opposing party, right?
Right.
That's what really interested me. And if you look at it, if you go back into the 60s, so forth, presidents always have they're going to have a higher approval rating among their party, of course. But the opposing party, it was, 33%, 36%, whatever. When you look at it now and the way it's trended, and I think this is a byproduct of things like the advent of social media and information technology, the opposing party approval ratings of the presidents, the last three, are single digits.
Yeah.
Right?
Yeah.
And it showed how, the two sides of the aisle have just gotten further apart, and the tensions are just, I'm an older guy. I've never experienced that before in this country, right?
It's a good point.
This level of animosity, right?
Yeah,
so
history has shown basically anytime there's a new communications technology, basically people, our minds don't know how to process that shit. So we just go absolutely batshit. And it takes some time, maybe it takes a generation for things to get really bad. And then you're like, okay, we better walk that back. So I think the more you preach that, I think we should be preaching that as wide and as far as we can these days.
And you have networks that cater to one message, right? When I grew up, again, the last century, you had 3 networks, and all of them were committed to try to present both sides of an issue. We could disagree about it. Over dinner we could talk about it and have differences of opinions, but you heard both sides. You don't have to hear both sides anymore. You can hear one message, and be bombarded with the same message over and over and
Ooh, and
over,
it's comforting.
right?
It's very
And
comforting.
very
It's tough to
comforting,
hear
but
things you don't think are true, or you don't trust, or
and I constantly try to myself always to hear both sides. I want to know both sides.
and
I
you
can
got to
I
know
can
it.
I can
You
make
got to know it.
but I want to know what someone else is thinking, why they're thinking it. And I think that's something, I don't know. There was a documentary called The Social Dilemma. I don't know if you've ever seen it, but it's about the advent of the internet. And they brought in all the people that were the original architects, and they talked about how the internet became something other than what they created it for. And they interviewed one guy at the end. He was like, originally he was like the head of monetization for Facebook, so like really high up. And they asked him, do you let your kids use the internet? And he's like, no way.
Chum off. It's chum off.
And then,
Son of
but
a-
they asked him this question. It's something really to think about. They said, what's your biggest fear? And he paused and he said, civil war.
Well,
Because if you could stratify your message, right, and you could bombard people with different messages, and this is what's happening, the tensions just continue to increase, right? And I'm not saying we're on the midst of a civil war, but that was his biggest fear. Someone who understood the algorithms, he understood how everything worked, and that was his biggest fear, which is I just found fascinating.
yeah, very fascinating. What a terrible place to end it. But
Sorry, well,
Dawn, thanks
the
for
optimism
joining
is
me.
we can change it, right? We can change.
This was a great conversation until the end. But no, I hope
Now you know why I don't have
yeah.
any friends.
Yeah,
That explains it, right?
I mean, it all comes full circle here, doesn't it? But thanks everyone in chat for joining us today. And again, go Pistons, beat the Knicks. Sorry. And yeah, everybody enjoy the long weekend. Y'all deserve it. Have a good one, everyone.
Thank you.